Good morning, sunshine.
In the real world. Whoa! Mortgage your house and buy Bitcoin with free air. There's no second best, okay?
GM. Trade of the day. So, alright, I shared a version of this chart yesterday, I believe. It was about looking at this 4-hour gap, which is between the two dotted yellow lines. And yesterday we were around here as I recorded, and I mentioned that using that gap as sort of your bullish and bearish line would be a good way to approach it. So initially we went down, we retested it, went lower, and then after it reclaimed, it pushed up, and we're moving towards the high end of that gap now. So the gap itself doesn't matter to me anymore. What I'm most interested in is the strong short squeeze that we saw, and where is that going to go from here? Because we had some massive short liquidations here. And for now, like in the immediate term, I think the market goes higher. It's certainly doing a brutal squeeze. This is the like worst type of conditions. In terms of the squeeze, when it says the worst type of conditions, it's like a really, really, really slow, and every time it moves up, it pulls back and it sort of grinds higher, and it pulls back and it grinds higher, and it pulls back, and no pullbacks actually follow through, which is an indication that the market wants to go higher again for more liquidity. It's not really a sign of, at least it's hard, it's always difficult to tell, but it's generally not a sign of strength, because stronger moves tend to be more bearish in nature, right? They don't tend to go up and keep grabbing and grabbing and grabbing and grabbing. They tend to move up and then get really choppy and look shit and go sideways, but not making the highs, and then impulse and break out again. That's more of a bullish structure, whereas this one, where it's just rising and squeezing and squeezing and squeezing, is usually an indication that the market's trying to clear out whatever level of shorts there are on the retracement, on the retest, before, whether it's continuation lower or just a retest to the lows, that would be the direction and the expectation. So anyway, here we saw, like, and I have to put this in context, massive short liquidations. Zoom all the way out. The short liquidations we saw yesterday are bigger than the liquidations on that fucking collapse, right? Obviously that was the downside. That was sort of 400, 500 Bitcoin, about 400 plus 300, about 700 total. And over here we had 800, just in that push. So a large liquidation spike, as you can tell. And then after that, so I've marked the two individual candles that mark the tops of those. So that'll be the highest point at which people got liquidated on both of those candles. And then we look at price action since. And so price action since then has had 1 and 2 further pushes higher, and we're currently trading above that previous liquidation price. Obviously, with a massive decrease in liquidations, so there's no liquidations relatively compared to this. The point being, if this weekend move, right, if this weekend move was designed to squeeze out shorts, that's happened there. If the rest of this move is going to be bullish, you need to see probably an impulse breakout that holds. You don't want to see it just keep doing this, because that's just probably going to roll over. If you're bullish, you want to see it actually break out, which would be more of a, which by the way can happen. I mean, the markets might go bullish this week. It would be some kind of actual impulse that breaks through and then consolidates at a higher level. That would invalidate this. At that point, this doesn't matter anymore. It's just a trend shift. There's not really enough to say there's a trend shift here yet on the bullish side. And so the price action is all important over the next, whatever, today. And since the lows, we've also got a bit of open interest build up. So since that squeeze out, and open interest bottomed out at that point. OI has been building to the tune of about 2%, and from the price lows to where we are now, price was up a maximum of 2%, and we're up at 1.7. So open interest is outpacing price ever so slightly. I wouldn't say it's anything crazy, but you would obviously assume a lot of that's longs. As you can see, market's rising, making higher lows. So the long side is currently correct, by the way. You know, longs are right when the market's going up. It's only if and when that changes that things get different. So I don't know. I don't have a strong opinion here, because the higher time frame trend is bearish, but lower time frame, there's loads of room easily for price to go way higher. Like, you know, if you just zoom out, there's so much liquidity and so many stops all the way up that just a sharp squeeze can take all of it out. Now, I don't know if it will or not, but if you're looking to actually trade this and get short, you have to have some kind of, you have to have some kind of confirmation. So you don't want to be just piling into positions that are based on, you know, nothing. And I think using those liquidations as a rough guide is probably a good place to start. Because those liquidations are, I think they're the most important thing going on in the market at the moment. Because, again, it's massive. It's massive. It's like equivalent to what we see down at these lows, where you have complete, you know, chaos. So these massive liquidations are probably, at least the way I would view it, I would use them as some kind of a pivot. Meaning, as this market develops, and as we squeeze and squeeze and squeeze and squeeze, let's imagine it holds and we squeeze one more time. If it fell back below those levels and started to go like that, I would be very confident that that's the end of this move, and that we're going, you know, down and down. And of course, if the opposite happens, if we get outside of it, break out and hold, then it's all good. You know, how would that look? Well, looking at something like, I mentioned this over the weekend, like the retracement. So we've come right up to the 0.618. So right where we are now is about, if you're just using like trend logic of fibs, sorry, I haven't drawn that right. Here, right, we're still at the 0.618, but slightly past it. We're right at that area, which is kind of the last point at which trend moves can fail and, you know, go in the other direction. And anything more than that, if this starts to break out to 56 and holding up there, it's very unlikely for it to be a bearish trend. It's more likely to go into some kind of a consolidation or range. And I think you can see this 4-hour gap candle. You know, if we trade outside of that and hold, it seems like it's more constructive for price to fill all of this gap and maybe even go for that liquidity. So getting above, I would say getting towards 56 from here is a sign of strength, at least for this, you know, this part of the week. And going below that, going below this previous liquidation level is where sell-off looks most likely. So right now, squeeze continues, you know, let it continue, see where it's going to go, and wait for weakness. I wouldn't short until there's some more clear weakness. And as for getting long, I'm not, but doesn't mean you can't. I'm not getting long because I don't see any setups. I wouldn't be sure that this is a lasting trend yet. The thing with longs like this too is my systems don't, like, I don't try and target longs that move like this, where it pushes, you know, where it's like squeezing higher, like squeezing higher, squeezing higher, squeezing higher. They're not the kind of longs that I take. I don't think they're the kind of longs really anyone should try and target, because, you know, it doesn't respect any trend structure. Where do you actually, let me put it this way, if you're long from the lows, this kind of price action will be one of your reasons to start taking profit. Just the exact same way as if you're short, right? Why do you exit your short? You enter a short, it breaks in your favor, and when it starts to do that, kind of like this, and then it's slowing, like that's exactly the reason to exit, when it starts to slow. And that's sort of what you're seeing here. Again, it doesn't mean it won't re-accelerate, but the bounce off the lows, the consolidation, the squeeze up, failure to go, trying to false break it again, all of that indicates that this is still a squeeze portion, which, by the way, makes complete sense because it's going to be hard for longs to have really clean trends when we're in a downtrend. You know, and that's why it can keep grinding higher. A lot of it's, you know, there's a combination of disbelief. People don't want to get long because they don't think it should be bullish yet. And there's just hesitation because every time people get long in the last fucking 6 months, it's always rugged them. So I believe the start of our next big rally, which could already be happening, start of our next big rally is going to look shitty. It's not going to feel good. You're not going to want to get long. So that's where you just take your systems and trust them. And for me, if I was looking at more of a view into longs, I would say something like the 4-hour bands crossing would be a good starting point for me. If I turn that on, look at it here. Yeah. If we continue to just hold here and keep squeezing and squeezing and the 4-hour bands turn green, that's an initial area to look at. Because I think if it's going to continue the weakness, it shouldn't cross the bands, of course. And also, we probably, given that it's Monday, I would say today, maybe in the New York session or early tomorrow, we should just dump. And also, that's the last thing I'll talk about. New York session coming up. Right. Thursday, 29th of August, that red candle, New York session. Friday, 30th of August, that red candle, New York session. Tuesday, 3rd of September, that red candle, New York session. And Thursday, this red candle, New York session. Friday, this red candle, New York session. Clear, obvious pattern of New York sessions dumping over the past couple of weeks. So it'll be interesting to see what happens today. Do we see a continuation of that or a change of character? And that's it. G fucking M. GMGM.